Good afternoon, everyone. Traders are just coming into the room. We're going to be starting promptly in about 60 seconds. All right, good afternoon, everyone. Thanks so much for coming. This is Mark from Right Line Trading. And what I'd like to show you today is our complete Unirenko trading system. I think you're going to find it very, very unique and something that you've really never seen before. If you'll bear with me as we move through the slides, I really want to take a significant amount of time on our charts and show you some innovative things that we've done that you have not seen before. Now we're at rightlinetrading.com. Info at rightlinetrading.com is our email address, and our phone is 786-713-5276, and I'll mention that again later. And I have to start with this disclaimer that signals and trading opportunities provided both orally, written, or electronically that are disclosed to visitors or subscribers are for educational demonstration purposes only. We take no responsibility for any participation by visitors or subscribers within any of the markets for any profits or losses. We're not certified trading advisors, and we advise that you consult one before making a trade, or your broker, and never risk more than 2%. And you know, as you know, the potential for substantial losses is always present. Now, just a little bit about myself. I'm a graduate of the University of Pennsylvania, former professor at Jefferson College in Philadelphia. I've published close to 15 peer-reviewed articles in first-tier journals, and I've been involved in the financial markets for over 20 years. You can Google some of my papers if you put in Sachs MK into Google. And I just want to say here that I'll answer all questions at the end. If you have them, put them in as we go through as I go through the lecture, and then I'll answer everybody's question. Now, our software is the product of a decade of analysis of price action, market structure, and indicator algorithms. And the software is based on mathematical modeling of closed systems utilizing multivariable equations. And it's a mouthful of words, but what it really is a mathematical form of search optimization. I mean, and to give you an example, in the old days, back when I was training, the Navy used to do deep underwater dives, and the decompression schedule that divers followed was extremely hazardous. And a lot of divers would get the bends as they came up. And the University of Pennsylvania has probably the best, I think, and the biggest department of underwater physiology. So a lot of those divers would come there because they had huge decompression tanks where they would sit sometimes for days to try to get them through the underwater decompression sickness. So what I did along with one of the professors was to optimize the decompression schedules that these divers did for the US Navy using a search optimization program known as ASOP, which stood for the underwater which stood for the automated engineering and was an automated engineering and scientific optimization program. And I utilized these same search engine techniques to create the software that I'm going to show you. And we are one of the fastest growing trading systems on NinjaTrader. Now, the Unirenko system, again, as I mentioned, is really different than anything that you've seen in the past. If you've listened to me lecture before, you're going to even see some new things that you haven't seen. And it's going to give you very precise, exact software-generated entries that have a very, very high probability of becoming successful. I mean, the risk to reward here is extremely good. And the positive predictive value, or the percentage wins that you're going to get off of a conservative entry, is extremely high, 80% or greater. And we're used by many, many funded top step traders. We have 150 traders in our live trading room. Now, why is it so good? And what makes it the best, besides the fact that I think it is? As I mentioned, the system was created via the use of mathematical modeling. And everything that it does is forward-looking. It doesn't have any indicators that lag the market. Everything that it looks at predicts how price is going to move out into the future. Everything is a forward-looking indicator. And I'm going to show you exactly how we do that. And the techniques that created all of these forward-looking indicators are the same techniques that Google, Facebook, all the big tech companies use to create a lot of their software. Now, you can trade the futures market, the Forex market, and stocks. Now, the Unirenko system is optimized, so all the Unirenko settings have to be changed. I mean, that's incumbent upon us. You can't trade Google with a 1-minute candle. You also can't trade every single financial instrument with the same Unirenko setting. And so we have optimized them, and we know the appropriate settings to use. Now, all indicators, as I mentioned have forward-looking ability, and these indicators lead price, they don't lag price. And the whole purpose of the software is to predict the future movement or the future direction of price. We don't care where it's been, we only care where it's going. And that's what makes us profitable traders, if we can do that with a great degree of precision. Now, for a long time, I traded range bars. And range and Unirenko have a lot in common. There's only one independent variable that determines when a new bar is created, and that is how far the market moves. It's simply determined by the movement of price. It has nothing to do with time, like time bars do. It has nothing to do with ticks, like a tick chart does. It is only related to the movement of price. But if you look at range, it creates a lot of chop. And we're going to talk about the strengths and weaknesses of range versus Unirenko in a second. But if we look at range, this is the same period of time on a range, on a Unirenko, and you can see how smooth the market is. Now, that is good and bad. And we're going to talk about when it's good and when it isn't. Because everything is a trade-off. If you smooth out price here, you got to give up something. Now, the problem with the Unirenko bars is that they obliterate some price action. You're going to see that we do get to trade some price action, but a lot of price actions obliterated. Now, Who's in control of the market, the bulls or the bears? If you're a price action trader and you look at Japanese candlestick patterns, which I think we'll talk about their value, but if you look at an engulfing candle, a dark cloud cover, a piercing candle, a doji, I mean, I think these things have some relevance in telling you who's in control at that second, bulls or bears. You can't discern from a rising and falling triangle, or you can't see consolidation or channels. You can't see a bull flag or a bear flag pattern. That's all obliterated by Unirenko. Now, Renko, forget. Renko obliterates 100% of price action. Unirenko obliterates most of it, but not all of it. So in order to trade Unirenko bars, you do require powerful leading indicators to get an entry, and also powerful leading indicators to prevent you from trading in chop. And that's the real trick with Unirenko. You can always get into a great trending market. The problem is staying out of a choppy market. And I'll show you how well we do that. Now, just in general, talking about Japanese candlestick patterns, I don't know exactly when the Japanese invented them. It was probably 1,000 years ago. I really don't know. That may be a lot longer than it was. Maybe it was a couple of hundred years ago. But whenever they were first developed, they were extremely powerful. But as time progresses, they have lost a significant amount of their predictive power. And the reason is because the market is so dominated now by large institutional trading that when every single individual trader had pretty much an equal say in the direction the market took, then Japanese candlestick patterns had a lot of value. But now, when in any given second, an institution can start an algorithmic trading program via the use of a computer and start dumping in an enormous amount of contracts. And in between that period of time, the market just chops without the application of this big money. Japanese candlestick patterns and their power have really receded in value. Now, their value isn't zero. It's just that they really have become less powerful than they have in the past. And really have bull and bear flag patterns. Oh, they're still valuable, but they fail a lot of the time. And that's really because of institutional trading. I mean, some traders think up to 70% of the time, a bull flag or bear flag pattern will fail. I look at those patterns still anyway for my options trading, but they're just not as conventional Japanese candlestick patterns as they evolve from candle to candle as we day trade really don't have the value they used to have. Now, the power of Unirenko bars is they do filter out a lot of noise, and Unirenko does allow you to evaluate some price action. And we're going to look at bullish patterns and bearish patterns, and that's because they allow the candles to form a wick. And those wicks are extremely valuable in telling you what's going on inside the candle and who's in control of the market, the bulls or the bears. But again, you need a powerful leading indicator that signals an entry to really get a superior trading opportunity. And these indicators have to allow you to sidestep chop. If not, you're going to get a lot of winners, but you're going to pull in a lot of losers. And if you've heard me talk before, you know that my mantra is, it's not the number of winners you get, it's the number of losers you get. If you can filter out the losers, you will be a very successful, profitable trader. It's so because every day trader and swing trader pulls in nice winners. It's the fact that they also pull in a lot of losers. To put that mathematically, they trade with a lot of sensitivity, but not with specificity. The specificity allows them to filter out losers. The sensitivity allows them to pull in winners. And the trade-off between those two is not optimal. Now, let me give you an example of two full system trades. Now, that may look like a lot to take in, but It's a very, very quick learning curve. And essentially what we create is a neural net looking at other markets on other time frames in order to validate a trade entry. And it gives it tremendous predictive power when you get a great setup right off support and up you go. I'm doing this prematurely because you don't know, a lot of you don't know what any of this means. Here's another trade. It looks like the same. The first one I showed you was on the E-mini, and this one's on the Dow, and I'm also going to show you a lot of stock charts. Now, the first indicator that we use that has future predictive power is the 3-line indicator. Now, the first line does a multi-time frame assessment of momentum. The second one does a multi-time frame assessment of stochastic. And the third one, a multi-time frame assessment of order flow. Now, the one thing that we do that is really important when you're looking at when you're using indicator analysis, that the indicator analysis is not done from your trading chart. If it uses data from price movement on your trading chart, then it creates, then the indicator becomes dependent. We want it to be we want it to provide us with independent data, and that independent data creates independent forces that come to bear on price. So we don't look at momentum, stochastic, or order flow on our trading chart. What we do is we look at the 2 higher multiple Unirenko charts. I'm going to run through quickly how the assessment's done. For order flow, I mean, it's a little blurry, and I apologize for that. You can see that the number here is 2,985. Now, and it's green, and the candle closes to the upside. And a lot of, it's very faddish nowadays to do order flow tracking. But unless you do it appropriately, it can be very misleading. Now, what this number means is that there's a significant overabundance of buyers on the trading dome. There's more buyers sitting at the ask looking to buy than there are traders on the bid side looking to sell. Now, you can try to buy at the bid, but we're only looking at buyers looking to pay the ask price and sellers looking to sell at the bid price. And there's an overabundance of buyers. The market depth on the buy side is higher. And that creates theoretically buying pressure. So we get an up candle with a positive delta value. Now the problem, and here's a doubt, the problem is this. Sometimes you get a down candle with a positive delta. Now that's a positive 222. That's the problem with order flow tracking. Especially problematic when you do it on a tick-by-tick basis. Now, some traders look for stack buyers and stack sellers on higher time frames, and maybe that has some validity. But this is the way that we do it. Now, if you look here, here is a series of deltas above candles. And what you're going to find is that a significant number of delta values create a candle that closes in the wrong direction. Now here's a positive 1464 on a down candle. And here's a negative 220 on an up candle. So if we're going to use order flow tracking in order to determine the future direction of price, how are we going to get rid of this data? And how are we going to make it valuable? And the way to do it is this. It turns out that 66 2/3% or 1 standard deviation's worth of delta values close in the direction of the candle. So we're only looking at the outliers that close in the opposite direction. So we want to use that 1 standard deviation's worth of data to drive our indicator analysis. So what we do is this. We look at the delta of each candle on the 2 higher multiple Unirenko charts. Remember, we never look at any data from our trading chart. If we're trading at 2 Unirenko, we're looking at the 4 and the 6 Unirenko. And we take each delta value and we place it into a 15-period simple moving average. And that simple moving average, because it uses 15 values in a row in order to determine its curve, filters out the outliers. So when both 15-period SMAs on these two higher Unirenko multiple charts or longer time frame charts are sloping up, there is real significant buying pressure in the market. And that order flow line is going to be green. When both 15-period SMAs are sloping down, the bears are going to be firmly in control and the line's going to be red. And when the 15-period SMAs are not in agreement, it's going to be yellow. Now, here's an example. Now, remember, this leads price. When price comes down here, then the order flow line turns green. Price is going to rise. Now, remember, it's not looking at price movement on your trading chart, and these are candles from your trading chart. So this isn't turning green because price is rising. Price is rising because this line is green. Now, what this does is it gives you an absolute direction to trade. Now, I'm sure there are many traders in the room that get stopped out and get caught trading in the wrong direction. You have to trade in the direction of order flow, or the likelihood of getting a successful trade is going to be extremely small. Now, I don't like to counter trend trade, and I don't do it very often, except when there's one pattern that I may show you if we have time. But you cannot even think about it until the order flow analysis has rotated and there's significant selling pressure in the market. It's still very problematic and it's dangerous, but this is the only time you can even consider it. And you can see the line turns red and then the roll occurs. There's another example. Now, it doesn't matter the size of the Unirenko candle or the instrument. This could be a stock, a Forex pair, or a future. It's irrelevant. It works on all of them. And the fact of the matter is, if these forces didn't work on any financial instrument and on any Unirenko multiple, they really wouldn't be valid. If these are real forces that govern the future movement of price, they can't be selective. They can't just work on stocks and not futures, futures and not Forex, work on a specific time frame. They have to be universal and independent of time frame and independent of trading instrument. So as soon as order flow turns green, this is going to roll back to the upside, and you can't short the market. Now, a lot of traders trade oscillator divergence, MACD divergence, and they get crushed. Trading divergence is really a ticket to bankruptcy. And that's because the divergence signal usually comes against the direction of order flow. Now, here's another example. Order flow leads price. Up we go. Here it's yellow, and you can't trade. And here it's red. You have an absolute direction to trade. Now, here on this pivot, it's green, so you can only trade long. Now, when we only have one line of the three lines, it's a little more difficult to define chop, but you're going to see when it goes from green to red, green to red, green to red, and you have three lines, as we layer and develop more specificity, it's going to be very, very easy to define chop. Remember, if these three forces, which are equal in power, order flow, momentum, and stochastic, don't align, price doesn't know what to do, and it's simply going to chop. As soon as order flow comes into alignment here, price is going to rise. Now let's add momentum. Now, how do we calculate it? We look at the slope of the MACD line. When it's accelerating away from the signal line, momentum is positive. When the MACD line is accelerating towards the signal line, momentum is negative. Now, the three line does a little more sophisticated an assessment. It also assesses the MACD crossover. And I'm going to show you how that data is reflected, but not till the end, and we go to our charts. So what we do, again, we don't look at the MACD from our trading chart. That's only going to tell us where price has been and how it's driven momentum up to that point, but it has no future predictive value. We look at the two higher multiple Unirenko charts. Now, this shouldn't be momentum line, it should be MACD line. When they're both accelerating away from the signal line, that momentum line is going to be green. And when both MACD lines are accelerating towards, and this should be line, I'm sorry about the typing, towards the signal line, it's going to be red. And when they're line in agreement, you're going to get yellow. Same type of analysis. So we're going to combine them. Now we're trading with greater specificity, and we're going to be able to filter out losers easier, and the trades we take are going to have a greater predictive value of success. So when we have momentum is the top line, order flow is the bottom line, and they're dual red, price is going to fall on your trading chart almost always. And when we have dual greens, price is going to rise on your trading chart almost always. And I can't tell you it's going to happen 100% of the time. If I did, I would tell you we never take losers, and sometimes we do. But the predictive value of a trading entry is extremely high. So the risk reward on the trades are great. Here's another example. Now it's easier to define chop, because now we're looking at two lines that have to be in agreement or we can't trade. And when they're red, red, we go short. And when they're green, green, we go long. Red, red, short, green, green, long. And they can keep you in a trade. When order flow and momentum continue, you can stay in that trade a long time. And you can do it fearlessly because there's significant buying pressure. In effect, this is a way of tracking institutional money. Only institutional money can give you this consistent assessment of order flow tracking with dual green 15-period SMAs, or create that continued acceleration of the MACD line from the momentum line on the higher time frame Unirenkos. If you don't have institutional money here, you don't get these patterns. Small traders like us cannot do this. And that's why we want to be in on these moves with the big money. And here again, now we're it's becoming easier and easier to filter out chop. And then when we get red, red, only short. We know that this long move here is only a nice opportunity to short the market on the rollback to the downside. And you see, we do that very often. When we get a counter trend move, these are traders. This is only 2, 4, 6 ticks on a 2 Unirenko, or 4, 8, about 12 ticks on a 4 Unirenko. These are counter trend traders trading oscillator divergence, MACD divergence. They're trading off of fibs, all kinds of stuff that does not work. Fib lines are not going to tell you where institutional traders are going to start placing their money to bear in the market. In fact, Fibonacci, when he invented those lines, it was a couple of hundred years before the advent of the market. To think that those lines are going to tell you where price is going to stop and turn, it's absolutely insane. From a mathematical standpoint, there's no basis to it. You have to stay with order flow and momentum. Let these traders go. You're going to run them over. And as you do, they're all going to get stopped out, and they're going to help push price further down. They're all going to get caught in the yield short squeeze, and they're all going to start selling their shares. Now here's the stochastic line. Now the stochastic line assessment is also a little bit more sophisticated than I'm going to show you, but I'll show you how the analysis falls out. It makes it all easy to see. It does do an analysis of oscillator divergence on the higher time frames, but I just ignore it because it almost always gets run over. But let me show you how we do it. We look again at the 2 higher multiple Unirenkos. We never look at price on our trading chart for anything. Now, when the line is a greater than 80 and overbought, we believe that the bulls are in control of the market. So anytime the stochastic lines are both overbought, that stochastic line is going to be green. And when both stochastic lines are oversold, they're less than 20. We believe that the bears are firmly in control. We're not looking for divergence. We're saying the market's oversold and the bears are just pounding the market down. So we don't care where the stochastic line lies vis-a-vis its signal line. But between 20 and 80, that's when we have to look. If the stochastic line is above the signal line, the stochastic analysis is green. When both stochastic lines are below the signal line, the stochastic analysis is red. And when the stochastic lines are not in agreement, it's yellow. So now we have 3 lines, and we have to get them all in alignment on an entry in order to take a trade short. Now, I told you the first assessment, the momentum line, is a little more sophisticated because it's going to, I'll show you in a minute, but this is a move to the downside with the 3 line. Counter trend move you can't trade, and that's a 3 line called short. Now, when you have 3 lines rolling on your chart and they're changing intra-candle, it's usually pretty straightforward, and a lot of traders want to see the 3 line. But I don't like to I don't like to see it or even worry about its analysis. So we're going to have other data we need to put on the trading charts. We want to push the 3 line into a place that makes it easy to assess without taking up any space. So what we do is we project the results of the 3 line V2 indicator directly onto the candle, making the assessment real simple. So here's the 3 line, but we don't care about it anymore because all we do is configure within the indicator what we want a 3 line alignment to the upside to color the candle halo, and also the thickness of the candle halo. When the candle halo is blue, it means that the 3 line is aligned to the upside. When it's black, there's no alignment. And when it's yellow, it's aligned to the downside. So I don't look at the 3 line at all. I just look at the candle halo outline, which makes it really simple. Now you can change the color and you can change the thickness to whatever you like. And then you can ignore the 3 line. And to make it even simpler, well, here's are just examples of trades. Here's where you get a down 3 line on an up candle. That's the harbinger of a roll to the downside. Again, we're counter trend trading a short move. We're doing it with 3 line permission, but for many other reasons, we don't counter trend trade. We look for that down candle on that down halo on an up candle, and we get the roll. There's that down 3 line on an up candle, oscillator divergence, MACD divergence. All these traders are calling a bottom. The bottom will be called when the institutional traders stop pushing their money into this market, and down it goes right back to the downside. Now, again, as I mentioned, we want the workspace to be as clean as possible and no data projected that distracts our eyes. So what I do is I make my 3 line transparent, and I don't even see it anymore. Now, if you want to look at it, you can, but this creates this. All I need to see are the candle halos. And on an entry, I want to enter it with a 3 line to the upside, 3 line to the upside, or 3 line to the downside. I mentioned the problems with counter trend trading, but if you're going to try it, you got to wait till the 3 line rolls. So the chart now is totally clean. You have no indicators. All you do is have a candle halo that does that triple analysis of stochastic order flow and momentum on a multi-time frame basis, giving you an entry. Now, we haven't really talked about the entries. We've only talked about the absolute direction to trade. That's it. Here's another example. Here's an entry. Now, here's a long entry that we wouldn't take. Here's a short entry we can't take because the halo is black. Can't take this long entry because the halo is black. And then we've got this nice short entry. Now, the one thing that you have to understand is that when you trade with specificity, You're going to have to let some winners go because they're not going to align with your indicator analysis. If the analysis could call every winner, it would pull in a lot of losers. It's only going to call a trade when everything aligns. So you're going to have a little more patience. But when you do get an entry, it's going to have a tremendous probability of being successful. That's all you care about. You don't want a lot of trades, you want a lot of winners. And that's what day trading is all about. I'm telling you, a large number of traders overtrade. That's a big problem. And this prevents you from doing that if you adhere to the rules and you have a little discipline. Now, the exponential oscillator that we use is not absolutely required, but the signals that it gives are terrific. I trade this every morning and they're really good. Now, I just want to say from the beginning that you should never use anything that's calculated exponentially. Exponential moving averages are totally bogus. I don't know who invented them, but they crack me up, and I'll show you why. Price on the market moves arithmetically. It doesn't move geometrically, like you don't see a parabola, where as price begins to accelerate, it starts to curve up. It moves in an arithmetic form, which is why you never want to use an exponential moving average or an exponential anything. But for some reason, by taking this oscillator line to the second power and speeding it up like that, it just gives incredible entries. Now that's an oscillator entry with a 3 line. We only go long above the 50 and short below the 50. It's one of our trading rules. And you see the oscillator signal up, oscillator signal up. We don't take the counter trend. Oscillator signal right to the 50 and up. Now the oscillator signal, I'll show you how it's generated. Oscillator down, 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 down in the direction of the 3 line. Now here's how the signal is generated. When the oscillator line crosses above the 50 line, you get an up triangle. When the oscillator line, which is moving exponentially fast, crosses the 50 line to the downside, you get a down. Now these are all oversold signals. I want to remove them, but everyone in the room wants to keep them, so I leave them. These with a setting inside the indicator, these can be removed. All we're looking at is we're looking for down reds and up blues. There's an up blue. Obviously, it's not a really advantageous long entry, but here's a perfect short. Here's a perfect short. Here's a perfect long from what we can see. So the oscillator, if an entry comes with an oscillator signal, it has more power. Now, here's where we start getting into the neural net. And this is where the system becomes a little bit complicated, although it's extremely easy to assess. It just takes maybe a week of screen time. If we trade the E-mini, S&P 500, isn't it better? We just don't rely on indicator analysis from the E-mini, even if it's from higher time frames. We also want to know that we're trading in the multi-time frame direction of the NASDAQ and the Russell, based on the 2 higher multiple Unirenko charts. If we're trading in the same direction as the NASDAQ and the Russell, it's just intuitively obvious. Isn't it more likely to get an E-mini winner when you're trading in the direction of the 2 other index equities that have so many stocks that overlap? So we allow that assessment to take place without you having to look at 14 markets and 14 time frames. Now this is a little bit of this is a neural net. Now we call this our dot system. We actually have 2 sets of dots. The darker the red, the stronger the downtrend. The darker the green, the stronger the uptrend. So it goes from dark red to light coral, from dark green to yellow green to pale green. And these are the dots. This is a really bad JPEG representation. But all it's telling you is when you take this long trade, first of all, you wouldn't counter trend trade. Again, we don't have the 3 line. We're just using this indicator alone. Eventually, we're going to combine them all. But the NASDAQ and the Russell, based on the dot system, is still going up. Why would we want to counter trend trade? This is the NASDAQ. Why would we want to take, I'm sorry, this is the E-mini, and the NASDAQ and Russell are going up. Why would we ever take a short trade on the E-mini? We're going to take the trade when we get a long signal. And that's what these dots allow us to do. Again, it's an additional validation that a trade entry we take is going to evolve into a winner. Here's another example. These 3 up candles all are sitting below red dots. And this is on the ES, so they're assessing the NASDAQ and the Russell. And you're going to take the first down candle. Now, if you have the 3 line, that's additional confirmation of the trade, and you need the 3 line, but we're assessing these each independently first. And it also prevents you from ever taking this move up. In fact, you hope that you get another candle or two to trap these long traders. So this roll to the downside will squeeze them and push this trade down even harder. Here's another example. Now this is with an oscillator. These are oscillator signals. Long dot up. Long dot up. We're trading in the same direction as the NASDAQ and the Russell when we trade the E-mini. Now what happens when there are no dots? That means the NASDAQ and the Russell have no multi-time frame alignment. And it always means, and you're going to see this, that trading the E-mini is going to be a lot tougher. Because when all of these markets don't align, this neural net doesn't come into sync, you're going to have to worry big time about chop. Here's just another example. The short entry with the oscillator. No long trade, short oscillator. No long trade. Now there's no oscillator signal here, so there's no short. Now here's an oscillator signal short, but it's censored because it's sitting below a green dot. I'm going to show this to you live on the charts. Here's a long signal. That's the direction you want to trade. No dots, no entry signals, and no dots. You're in chop. And I guarantee you the 3 line is going to be all different colors. It allows you to stand aside with confidence and not take a trade that's not going to go anywhere. And occasionally the market will break out of chop and you won't grab it, but so what? If you have FOMO, you're not ever going to trade profitably. And I'm sure everyone knows what that is. FOMO is fear of missing out. If you fear missing every winner, then you're going to pull in 1 ton of losers. And so in order to increase the success of a trade, we put the dot system on 2 time frames, a slow and a fast. Now we trade, what we're trying to do is trade with more specificity. We're still looking at the NASDAQ Russell and the E-mini. This is the fast moving average. Here's the slow. When you get a dual dot entry, I'm telling you, the likelihood of getting a winner is extremely high. A dual dot short, dual dot short. Now, if you can take a trade with 1 dot. This is just the fast, and the slow doesn't kick in till later, but it's a little riskier. And you'll notice that as the trend intensifies, the dots become darker. And we call them dots, even though it's an X and a dot, just to make it simple when we refer to them. We just refer to them as dual dots. And you can see how intense the move is. Eventually, it just dies. Here's another example. The dual dots short. There's no trade long. Roll to the short side. You really don't have any dots here on this long trade. And you don't really have any dots on the short trade. but you have one dot here, and you could take this long, and one dot here, and you could take this long. But we need a lot of other. We need the 3-line. We need the oscillator. We're just looking at this. This is a small neural net because we're just looking at 2 other correlative markets that should move in the same direction as the market that we're trading. And here's another example. Trading in the direction of the dots. That's all. Don't get caught trading against this color. I tell you, you will lose this trade. If the NASDAQ and Russell are going up and you take a short E-mini trade, it's possible you'll get a winner, but the likelihood is so small, you don't want to be caught in the wrong direction. Now let's put them together. Now here's the dot on the roll, can't go long, no 3-line, so no short. And the dots censor the counter trend trade. And I'm going to show you this on a live chart. So here's a long on a single dot with the 3-line. See the candles outlined in blue, up. You have a dot on the counter trend, which I wouldn't take. And there's the long on the dot and the 3-line going up. And I'm just going to skip that. Now we have a money flow indicator, which is another indicator. And it may seem like it's a lot, but let me tell you, it is not too much. Because it's going to get very easy to make this assessment. Now, each market has its own unique money flow indicator, which makes it a pain in the neck for us to format. This isn't a simple workspace. And each is optimized to really track the flow of money on that individual market. Now, everybody says they have ways of determining money flow, but you can't do it directly. You can't look at money and determine where it's going. You just have to do it indirectly. And I'm going to show you the way we do it. And I think it's quite clever, and it really is accurate. Now, what we do here is on the E-mini, NASDAQ, Russell, and Dow, we also do it on stocks. We also do it on Forex. We do it on any instrument. What we do is we have correlative markets, and they're reflected in these 3 lines. This is why I don't want to see the 3-line, because I need to see these 3 lines. Now, the center line is the key line. And I'm going to tell you a little, it took us forever to get these correlative markets. On the E-mini, and I'm kind of focusing on the E-mini, but I don't want that to detract from the value of the Dow, NASDAQ, Russell, stocks, and Forex, and anything else you want to trade. I'll show you our bond and notes chart. Our DAX chart's incredible. I trade the DAX every morning. We had a 225 euro win this morning on the DAX. The center line is the NASDAQ, Russell, and Dow. The lower line includes treasury bonds and treasury notes. The upper consists of currencies and in energy. Now we know that when stocks, we know that in the course of a day, the amount of money present that institutional traders trade with is constant. So if the S&P 500 is falling, almost always the Dow is falling, and the NASDAQ is falling, and the Russell is falling. Well, where's the money going? Well, the money is going, this is where risk is off. The institutional traders don't want to take the risk of trading stocks. Where do they trade? They trade bonds and notes. They trade currencies. They trade precious metals. They'll trade in energy. So some of these markets are coded to fall to give us a signal when they move in the same direction. They're coded to give us a red when they fall with the E-mini. The others are coded to give us a red when the E-mini falls and they rise, because bonds and notes very commonly move in the counter trend direction, because that's where the institutional traders are putting their money. Now, the correlation coefficient is 0.7 or greater. So this correlation is 70% of the time accurate. not 100% of the time. So you're going to get trades that go past you without a valid entry. But those are the trades you have to let go, because when you get an entry on a valid signal, it's very likely to be a winner. Now here's that middle line, that key line, and you have to trade in that direction. That's the NASDAQ, the Dow, and the Russell. This is bonds and notes falling in the lower, and these are certain currencies and precious metals falling to give us money flow, telling us that's the direction of money flow. And if you try to counter trend trade this, again, you're going to get stopped out. Traders always do, which we love. These are the small traders like us. When we run them over, it makes the trade better because we get to stop them out and they push the market in our direction. We never want to get caught in this counter trend direction. And also now we have another way of defining chop. And you can see we are garnering a heck of a lot of ways of defining. We have no dots. Now, the dot system isn't there, but we have no 3 line. We have no key central line, no money flow. And this is when the big money is just standing aside. And the market is allowed to free float on the basis of the small institutional guys like us. And without the application of big money, the market will chop. Now, again, let's put it all together. We want that middle line to be red. We want the 3 line. We want the dot. We want the oscillator signal. And there's a short right below the 50. And I'm telling you, it's one you can take to the bank. Now, depending upon your automated trade management strategy, ours will take us out on a reversal candle. We'd have to go back in on this trade. But if you wanted to give it a wide enough berth, you could take this whole move down. The dots ride this all the way, the 3 line almost all the way. But it puts you in the appropriate direction. And it doesn't make any difference whether this goes 85 ticks, 100,000 ticks. As long as it's a profitable trade, as long as it gets to your first target reliably over and over again, that's all that matters. I don't want the 85 ticks to wow you because we don't ever get 85 tick trades. All that matters is we've put all the probabilities for getting a winning trade in our favor. Here's another. Here's a short, no dot. So it's risky. Here's a long, intermediate quant. This middle quant is the key. Great long trade. We have no short trade here. Sitting below a green dot. There's the intermediate, but you've got a red quant, which means our correlative markets aren't working for us. We have no 3 line. We have no entry. Obviously, no counter trend. Here's a good trade long, and that's it. You can see we need a lot for a winner. That's what we want. We were not able to get this winner, but who cares? We didn't take any counter trend trades. We didn't take any losers. And the trades we entered have a super high probability of being successful. Here's another one. And this is a $3,860 trade, $3,860. Again, it doesn't make any difference whether it's 3,800 or whether it's 150. It's simply the probability of the dot, the oscillator, the 3 line, and money flow. All these we call these quant lines because each market inside it, there are 3 in each line, are quantitatively weighted based on their correlation coefficient, which is all part of optimization of this program. Here's another trade, dot validation, money flow validation, up. No counter trend, dots won't permit it. And if you want to be really risky, there's the oscillator, there's the 3 line, there's the intermediate. You could take this trade short. I wouldn't take it short. I'll tell you that right now. But showing it to you if you want to be a daredevil, and I don't counter trend trade. And here's just one more on the E-mini. And here's with the dual dots. and it shows how well they define an entry and define a trade, and how money flow, how well that really sets you in the right direction. Now, I just want to talk one more second, because there's still more, and I don't want to overload you, but I want you to understand what each of these analysis does. This looks at the multi-time frame trend of the E-mini. I mean, we've looked at everything. We've looked at the multi-time frame analysis of stochastic order flow momentum, the multi-time frame analysis of correlative markets. We haven't looked at the multi-time frame analysis of the market we're trading, but it doesn't look at the time frame. We're looking at the two higher time frames. And I'm telling you, this is the most powerful indicator we have. When the E-mini aligns on its two higher time frames, giving you this dark pink, you're going to get your best short trades. And when there's no alignment and the market is clear and you stay out, you are going to sidestep so many losers. You're not going to believe it. It doesn't matter if they come with every other signal. If the multi-time frame alignment of your instrument isn't present, everything becomes risky. And there's a theorem in math about the nonlinearity of independent variables. This independent variable, the multi-time frame alignment of the instrument you're trading, is by far and away the most powerful. This is when you look for a great entry. Now, you can look other places, but it's going to be riskier. And here, these are different power up trends, but you're only looking for a long trade. And here's the oscillator, 3-line and up, dual dots. Oscillator, dual dots, 3-line and up. Oscillator, dual dots, 3-line and up. No counter trend, no dots, no trade. One dot here, you don't have the 3-line, that intermediate line, no trade. So these are your bread and butter trades. This line is yesterday's close or the previous session close. This is the volume weighted average price, the VWAP. Here is the market open, and we have a pivot indicator that's incredibly good. It doesn't look at the wick, only the candle body, which is what the Japanese intended it to look at. And it breaks only when 2/3 of the candle closes above it or below it. There's a lot of people who want our pivot indicator. We won't give it out or split it off from the program. Again, here's a move down, and you lose the quants. There's no money flow. And this is, this is a real trade. And look, everything just starts to plop around. Just don't have anything to trade. And anything you take, the dots start overlapping in color. Here's a green fast and a red slow. So it gives you a great way of seeing that money flow isn't present. There's no multi-time frame alignment of trend. It keeps changing color. The dark pink is what we're looking for. And you just don't trade. Now, this entry here on this oscillator worked. That was a winner. But it allowed you to avoid this loser, this loser. This was another winner. But let me tell you, you get eaten up by losers if you try to trade this way. And here's another example. I mean, that's an incredible trade. Here, you don't have the dots. You may want to take this trade anyway on triple quants with this great background. Here's an oscillator signal on one dot. Again, there's no 3-line here, so that's a tough trade. Here is your primo trade on this winner. Now, before I even show you the offer, let me go to the charts. Anybody can show you anything when you are in it. Let me show you the DAX first. And then I'm going to show you something on the E-mini that I didn't mention. I love to trade. I was getting up at 6 o'clock in the morning for a week to trade the DAX. And I started going into a coma because it didn't have any volume. And I basically was starting to lapse into a state of suspended animation as I waited all day for a trade. Now, I have to give you a caveat here. And that is the truth is that Ninja Trader hates me for saying this. They send me emails. But fractal indicators like the quants, like the candle halo, and like the dots change when you close and open the platform. Even the background bias, it doesn't repeat. Ninja Trader reanalyzes the data and shifts it to the right. So as long as your chart's open, it's accurate and will never change. But once you close it and open it the next day, you have to kind of push everything off to the left a little bit to get a perfect assessment of where things were when you were trading live. So it's just the way things are, and I don't want to mislead you. That's the truth. So when we look at this chart, we have to be careful with this analysis. Now, this is a great entry, and I don't know right here if we had the quants, because we'd have to push them over. And we don't have the dots, and I don't know if we had them in real time. And I'll show you the trade that I took. It was a beautiful trade. It was a 275 euro trade on 2 contracts. I took it real early in the morning. We were done in 17 minutes. This was the trade I took right here. It was perfect. We had dual quants, 2 quant lines, the middle and the lower. So we had money flow in real time. And I'm telling you, I'll show you my Ninja Trader and show you that I took this entry. And this trade went right up. Our first target is 6, and our second target is 20 ticks. 20 ticks is 10 points. This trade went 26 ticks, or 13 points. That's 275 euros. And you can convert that to dollars, so just by multiplying it by 1.15. And there were other great trades, and I stopped. Now, we also got a great NASDAQ trade. You see here, there's no background color. Here on this entry, there's no entry. I'm going to show you some great trades. Now, this is a potential trade right here. This is called a revolutions indicator. It's a smart indicator. It's a multi-time frame assessment indicator. It looks at market structure, price action. It's dual dots. And there's the short trade. This is a very risky trade. The market's oversold. It's still a winner. Oversold. It's still a winner. You've got dual dot confirmation of both roles. Money flow confirmation and background bias to the downside. There's a revolutions and a beautiful long trade, dual dot confirmation, but I'm not going to trade without background bias. It's just a rule I have. I'm going to let this winner go by. And there's our trade. Kaboom. Right here. Now remember, if you trade 3 contracts, that's 350 euros. If you trade 2 contracts, it's 275 euros. That's a lot of loot. And this trade has a very high win probability. And you're not going to get ticked out of this trade. This is a 26 tick trade, 18 points. Now we're moving into the end of the day. And I want to show you as many instruments as I can, because I want to show you an innovative indicator on the NASDAQ. And it's something that nobody else in God's earth does. Now I have to refresh it because the background bias is quirky because it's fractal. Now the NASDAQ is very hard to trade, but I'm telling you, we have killed it and we have tamed it. And I had a full winner on the NASDAQ today. We had a full winner on the NQ, full winner on the DAX, and we were finished. Now, there's no background bias, but let me show you what we have. Do you see this line? This is another addition to our neural net. And this is a killer line. If I can get it, if I can trace it out here. Hang on one second. And you're not going to see this anyplace else because I can tell you that we invented it. Now, I know it's hard to believe that we invented anything new, but we did. And I'll just take it to here. Now, what this is the dual assessment. Now, how many traders, when they trade the futures market, look at an assessment from the cash market? Well, we do. Remember, we're looking to create a powerful neural net. We want to look at other markets on multiple time frames for the dot system and for our quant analysis system. And here's our cash system. So what are we looking at here? We're looking at the dual assessment. I'm going to write it out. And this is why we really have the NASDAQ under our thumb. Of up tick versus down tick on the NASDAQ, and up volume versus down volume. So we're looking at these metrics off of the cash markets to give us a direction to trade on the futures market. And you see, and this is a live chart. I can't doctor this or play around with this. Right here, this line goes red, and it's telling you there's significant selling pressure in the cash markets. Now, I usually don't see it this long, but this was a bad day. And as we go further and further, all the way to here, the only direction we can trade on the NASDAQ futures market is the same direction we can trade on the NASDAQ cash market. Here's the up move. Now that's the trade I took this morning. Our whole net worked. That green line, up tick, down tick, up volume, down volume. Once the trade evolves, you don't have to continue to watch. And there's the up move. So we've got a very, very comprehensive assessment. Now, in order to make this indicator work, you're going to have to pay for a separate data feed. So I don't want to mislead anybody. It's going to cost you $70 a month, and you get it from Kinetic. If you don't have that data feed, this line will not operate. It's the only way to get up tick, down tick, which are separate metrics, and the advanced decline line. And it's not the advanced decline line we use. We use up ticks versus down ticks. Now, if I can find my control space, my control, I'll show you here because we're almost done. I want to show you a few more markets real quickly, and then I'll answer any questions you have. I'm just waiting for here it is. You can see I have all these metrics in here. Here's up ticks, down ticks, up volume, down volume, and these are all fed to me via Kinetic, and I pay the fee. Here's all our Forex. Here's our stocks, and I'll show you a stock. Let me show you Apple. Hold on a second here. Here's crude. I have to rotate some indicators, and let me move this to Apple. Now, if you want to day trade stocks, this is a terrific platform. Okay, I'm sorry. I just had let me just Look, okay, now, here's Apple, computer. If you want a great trade, now it's tough to take, there's your trades, right here. Now here we're just chopping, there's no background. Let's go earlier. Obviously, there's a lot of candles on Apple. That may have been a good entry live. Can't tell right now. Another potentially perfect entry right here. Short. Here's what I'm trying to show you. You're very, very unlikely to get a loser. Here's your perfect trade. When you adhere to all these rules and use and leverage every indicator, the likelihood of pulling in a loser becomes small. Now, this is early in the morning, right at 9:30. And I don't trade pre-market. Now, I could keep going on and on and on. You're going to see the same stuff over and over and over again. I'll show you any market or any instrument you like. And let me just show you, because I have the whole chart set up. Here's notes. Now, notes is really a swing trading instrument. Doesn't move very fast. But here's a short trade on notes. This is 17.25 a tick. We also have bonds, which trades 32.25 a tick. This is a perfect trade in real time. And this is going to last the entire day. But it's going to make you 1 ton of money. Same thing here in real time. Here's triple quants, dual dots, and up. The point is, when you don't get these signals and you stand aside, you're going to wind up sidestepping 1 ton of losers. When you get a great entry, it's going to work. Let me answer any questions. Let me show you our offer. Let me bring the slides up again. And that'll answer any questions that you have. Okay, here it is. Now, normally it's $29.99 for a lifetime license. On this, for this webinar special, it's $13.99. Again, it's a lifetime license. Now, what that entitles you to is all the markets we're active on. Now, we're only active on specific futures markets and specific Forex markets, although you can trade any stock. We're on crude, the E-mini, the Dow, the NASDAQ, gold, the DAX, bonds and notes. You're going to get, very soon we're going to have the 6E, the 6A, the 6C, all the Forex pairs, any add-ons, any upgrades, any new indicators. Like we just developed that uptick, downtick, up volume, down volume indicator just recently. It's almost brand new. And that will be rolled out to everybody who owns the platform. You're not going to pay us any money for any additional work we do. And we're always looking to make this better. If you're one of the first 5 orders, you'll also come into the room with me and trade for 2 months. Now, it doesn't matter if you trade stocks. It doesn't matter if you trade Forex. I trade futures. In the morning, I trade the DAX, crude, and the NASDAQ. Your learning curve is going to just mushroom, because you're going to see how I trade. And I trade with 150 traders in our room. And it's a nice community of traders. If you're over trading, it's a nice way of learning discipline when you trade with a group. And they're all really, really nice people. Everybody is out to see that everybody else makes money. And I really like the people that I've traded with. and some of them have been with me for years. You get a 10 module weekly educational training session. That's worth $1,000. That's what we charge for it. And our video tutorial library, which is 450 videos. So you can come up to speed on this super, super quick. And it's going to become second nature to you to be able to keep your hand off the mouse when you don't get a perfect entry and smack it hard when you do get one. So let me just see if there are any questions. Hold on. I opened up the wrong one here. Here we go. Okay. Okay, what is the difference between Renko and Heikin-Ashi bars? All right, I'm not going to worry about that. 18th century. Thank you, Gail. I mean, I thought it was 18th century. I wasn't sure. Okay, rice traders. Okay. Sure, Larry. Let me see NUGT. Hold on a minute. I have to put it into my instrument manager. And let me take a look. NUGT. Hold on. Okay, it's not coming up for me. And I think the reason is because I pay for 500 stock tickers. You might have to pay an extra $10 to increase that to 2,000 stock tickers in order to get some of the more unusual ones. I can't bring that up. I can bring up 500 tickers, and that's just not one of them. I'm sorry. In fact, it locked my instrument manager here. And if I can get it unlocked, I can't. I'll show you that it won't come up. I'm sorry about that. I'd love to show it to you. Sure you can, Larry. You can use this on Interactive Brokers. Interactive Brokers will power this platform. Now, this is NinjaTrader. It's the only one we're active on, but we have a lot of traders on Interactive Brokers who use it, and it will work. And that's the platform of choice for Canadians. Nothing on here, Pizzazz, is separate. We give you everything, including the money flow indicator. If we make a new indicator, we are going to give it to you anyway. You're never going to pay another dime for additional indicators, additional things that we add on to this program. And I've had traders with me for 4.5 years that bought a very primitive version who have been sitting on upgrades for the last 4 years. And we never asked to charge, we never asked for any money once you buy this software platform and you're with us. I consider you a member of our family. I'm here to make you profitable, and I'm here to try to give you everything I can to get you there, not to charge you every time something new comes up. I don't do that. Okay? Okay. All right. That's a good question, Jonathan. Jonathan, I'm a license holder. I love what you've done, but there is a critical issue. I hope you can address when to enter or not enter in the middle of a move. A move can begin with bias and 2-line or 3-line, but let's say it is missing dots and you may want to wait. My experience suggests that there is a time when it is too late, when you shouldn't pass on a trade. Do you suggest only entering within 1 or 2 bars of a basic signal? Okay, that's really a good question. Here's what I would do, Jonathan. Now, let me tell you something. Honestly, there's no straight answer for that. And let me tell you why. You know what? Trying to put Nugget in froze my platform too. And I don't know why it did. I can't move my charts, but I can explain it to you. You know what a perfect trade is. You know it has the money flow. It has volume with you. up-down volume. If you're trading at the NASDAQ, Russell, or Dow, it's got the multi-time frame analysis. It's got the dual dots. It's got the 3-line. Every trader has their own. The role of software is to define risk. That's what most other platforms don't. I mean, they give you entries, but the software developer cannot tell you what the independent variables are associated with the entry. They're looking for a jump of support off of the fib number or line or something. So you know what the most conservative entries are. If you're coming right off the 50 with the 3-line and background bias, and you have an oscillator with 1 dot, you can take the trade. But remember, all of this is discretionary and it's based on your risk tolerance. Now, I wish to God I had this platform open and that nugget entry froze it for me. And I can't back out. My instrument manager is up. Let me see if there's something hidden that I can't drop here that will open it for me. Because even the canceled, oh, here it is. I found it. Okay, I'm good. I got it in there already. Hold on a minute. Let me find it. See, it's telling me it's already there, but it's not there. All right, well, the charts, let me show you something. And I don't want to draw this out for other traders, but I'll show you something really quick. Well, no, let me close this. And I'll show you something. Now, I did a mentorship session today, and I'm going to show you, I'm going to try to answer your question for you. And let me show you a good example of why Unirenko is so much better than Renko. Now, let me find a good example. Of course, when I was trading with him today, I only found 100 good examples. Let me look at crude. And crude chart is awesome. And I'll show you an example. See right here. Here's a good example. Let me take off all the drawing tools. Okay, right here in real time, you had dual quants. Both of these lines were red. This background was shifted over and this candle was red. And background was red. Now you have no dots. You get them here, but here's why I love this trade. I love it when the candle breaks the 50, but shoots that wick up to resistance, and you have everything else. And I love these entries. And as the more experience I get with them, the more I like them. Now, if you missed that entry, look at this entry here. This is riskier, but still tradable. This is the stuff we're going to learn in the room because we're going to take these trades. Now you have dual dots and price. This is called a bull failure. Price shoots this wick right up into the VWAP, but it can't get the candle to reverse. Right here. This is a great continuation trade to the downside. Like that. So those are the kind of times that we give the market a little bit of leeway. And I want to show you one other kind of trade. Here it is again. This one's a little bit tougher because it's so screwed up because the time kind of skewed all the colors. But let me show you one more. Of course, now I'm never going to find it, but there were a million of them here when I was trading it today with him. Hang on one second. Hold on one second. Let me find exactly what I'm looking for. And it comes up all the time. And like I said, here's when I can never find it. And I cannot believe I can't find it. All right, well, I'm not going to push it here. You're going to see it happen in the room all the time. And it's really, really, one is called a tweezers formation top or tweezers formation bottom. And the other is a dual bull or dual bear failure. And I can't believe I can't find one. I'm telling you. Here's a tweezers formation. At least I found one of those. Right here. You can look at this up in the Japanese candlestick books. Right here is a dual bull failure. And here's your short candle. So it comes with an oscillator. I think you have money flow. You don't have background bias. It depends on how much you want to trade. I know I'm going way overboard on the information because I want everyone in the room to just take the most conservative trades, but I'm just answering your question probably in more depth than I should. But there are candle formations that we can get and additional trades that we can get safely, and they don't have every single independent variable. But the fact remains, if you have them all, you're safer. And I remember this entry right here. It failed. It did not work right here because it was trading right into a pivot. This trade did work, but was no valid entry. So you traded a loser for a winner. Okay, let me go on. That's a really complex question, and I hope I didn't go too far with the answer. Now let me find the questions again. I hope I didn't vaporize them. Hang on. Hold on here. Oh my gosh, I can't find the questions. Hold on. Okay. I'm missing my questions. Oh my God. I think I might have clicked them out or lost them somewhere. Hold on. This is what happens when I start waxing on here. I mean, look, I don't see them. They're gone, I think. Let me see if I can still scroll and find them. Nope. I lost the rest of the questions. I might have clicked them out. Now, I don't know how to get them back. And so I'm going to be missing some questions here. And I really apologize for that. Maybe Rory can come in and help me get these questions back. Hold on one sec. Okay, Rory's coming in here. I think I might have clicked it out, Rory.
Questions?
Yeah.
Here, hit this panel button.
Here?
Yeah.
All right, I got them. Okay, thanks, Rory. John, we're only going to take trades on a pivot because we don't take a trade intra-candle. Now, here's what I was looking for, except for this situation. Remember, if you look here, you have 2 attempts by the bulls to push this market into the 50. If you wait long enough, now this isn't a trade, I'm just showing you the formation. Right, you're only going to take trades on a pivot up or a pivot down or a pivot up. That's the best place to take a trade. You can take a trade intra-move if you get a pullback wick here into resistance or long down into support, like right here. This turns out to be a pivot. Those are the only places you can take a trade. If you just want to walk into the middle of a move here, there's nothing that guarantees the market won't reverse on you on a heartbeat, blow you right out of the trade. You need some kind of entry signal. Traders that just chase a move and believe it's going to continue just because they think it's going to continue are going to wind up accruing losers. We got to get in at the beginning or close to the beginning or on a pullback, an appropriate pullback. Okay, Martin. Yeah, it is good for stocks. and you can record it. It is recorded and you will get it. Martin, I'm going to teach you how to trade futures. I mean, if you come aboard here, every morning is an educational experience. It really is. I go through every trade on every market, and I go through all the rationale and all the reasoning for the trades I take. I don't just close up. We usually go an hour after the room ends. This morning, we finished trading in 17 minutes, and I continued on for another hour. And you get to ask me any questions you like concerning trades I don't take, or if I got a loser, I didn't get one today, concerning why I took a loser. So it's very interactive. I can't think of a better way. I also have a mentorship program. I'm not sure what you mean, Fitzroy, by that question. Okay, well, I do, yes, I trade it live, Vishal. Yes, Jay, the 3-line, everything on this chart updates intrabar. So is it possible the 3-line would begin at one point and change to red? It is possible that the 3-line will change intra-candle. It is possible, Jay. Ordinarily, it doesn't. But when you see a good entry, you got to watch it. And if you see that the candle pushes upward and it turns blue, you're going to take it, you're going to enter the trade one tick above the close to the upside. If it doesn't mature to the upside, you're out of the trade. I mean, that's not really a problem we have. But I'll tell you, but every now and then on a short trade, you don't get the 3-line until it closes, executes, and then one tick more. And then you miss the entry. It happens. But then you just look for that pullback to resistance on a short or that pullback to support on a long. Every now and then, you're just not going to have it align when you get your entry signal. So you have to watch. That's all I can tell you. Every now and then, it is going to happen. Thank you, Phil. Accused of AI. Yes. I mean, we're looking to automate the whole system, Phil. We're working really hard on it. I mean, all the entries are there, and we're close. Ricardo, for the trading room after 2 months, it's 149, which I'm hoping for you will be one winner in one day. It's $149 a month. The trading room hours, Stephen, this morning, we traded for 17 minutes because we made almost $500 on 2 trades. If we have to keep, I mean, good trading hygiene, so to speak, is you set a profit target, and when you hit it, you close. Our profit target is about $400 to $500 a day. We hit it early, we're out. We hit it this morning in 17 minutes, we're gone. So if we don't, I mean, I'll trade till 12, 11:30, 12:30, whatever I need to do. I want to extract money from this market. Now, for a while, I was getting up at 6 o'clock in the morning to trade the DAX. And seriously, I was about ready to go into a coma. But it doesn't move at 6 o'clock in the morning. It moves at 3 a.m. Eastern time. And I can't get up at 3. But the DAX makes great moves when the NYSE opens. And we got a terrific trade today. And if I would have stayed with the DAX, we would have gotten a lot more money. But I'm just not going to trade when we have that much money on the table already. And I think it's bad to look for one more winner when you've already hit your profit target. Because a perfect trade can always blow up. And here was the entry right here at 743. No, I'm sorry, not 743. I didn't start till 9 o'clock. I'll show you the short trade I took. It was right after that. It was right here. That was the trade. And that was a beautiful trade. I let this one go, was a little bit too far off the 50. This one go was way off the 50. This one didn't have the 3 line. Here, the 50 had come up to meet it. If you look at the candle wick, it's 1 tick off support. Up we went for a full winner. 275 euros on 2 contracts. That's just the way to do it. I could have taken more risk here, but look at this trade. That's a loser. This trade, no background bias. I didn't want to touch it. Oh yeah, Gene, we install everything for you. This is not a simple installation. I mean, you're going to get a zip file. You're going to be asked to send us your NinjaTrader machine ID, serial number, and then Sergio will do the complete installation. Because remember, if you want that cash metric on the futures market, you have to sign up for Kinetic to get that, and he'll configure it for you. Because NinjaTrader allows you to have multiple data feeds. I have Kinetic, I have CQG, and I have the FXCM. So I can trade the Forex, the stocks, and futures. Now these I get, but Kinetic I have to pay for in order to get that that up volume, down volume, and advancing issues and declining issues. But they really help you trade stocks, and they help you trade futures, because you want to be in the direction of the cash markets. It's just another part of that neural net. Sure, Michael. You can trade it to Unirenko, but I think it's going to be too fast for you. I mean, these are just our recommended settings. For the NASDAQ, we trade a 4. For the DAX and crude, we trade a 2. For the E-mini, we trade a modified 2. I can't find it. But we have settings for all the different instruments and all the different stocks. And they're just based on their volatility. You don't have to follow our recommendations, but I think if you do, you're going to wind up either trading a candle that moves too slowly or one that moves way too quickly. So, but obviously you can configure it however you like. That's not a problem. No, Ricardo, I used to trade the DAX before the NYSE opens. I was trading it at 6 o'clock in the morning. But I got to the point where I was so tired and exhausted. And at 6 o'clock in the morning, it's turning 220 contracts a minute. And it was just useless to do. So now I don't trade anything until the NYSE opens. And when the NYSE opens, that DAX flies. Here is 930. This move up, this move up, this move up, this move up. And this is on good volume. And here's background bias, none. Don't touch the trade. We just had no entries here. Nothing to trade here. Just step aside on all this stuff. And there's your entry. Perfect entry. Got to wait. But if you wanted to wait till 11:25:31 Eastern, there's your short trade. Perfect. Just got to wait. Dual dots. That's a revolutions indicator. Very meaningful. 3 line. Dual quants. Money flows coming out of the DAX. Perfect entry. So you get tremendous movement after the NYSE opens. Yes, Mel, if you have the 3 line, we give you full credit for the system, for the upgrade. No, your computer, it's a great question, Jim. Your computer generates all the signals. If these were coming off a central server, they would be delayed. So everything that you get is based on software analysis from your data feeds. That's why you have to get your own data feed in order to get the cache line. I can't give you the exact, Ian. I'd say we're between 75 and 80%. And I'll tell you this, Ian, 95% of the losers are because I take a bad trade. They're human error. because when we go back and we look at the trade, something's wrong with it. That's the value of being able to trade over my shoulder. And there's a lot of traders in the room that are better traders than me. I mean, we have guys in there making $1,000 a day, and I kid you not. And we have testimonials, and they're real. And those are better traders than me. And they know when they see a trade that maybe is a little bit too risky for them, and they stand aside. And if the trade goes, they don't care. And if it blows up, they're happy. So I'd say, but I'd say we're in that neighborhood. Martin, it can work on daily bars. If you want to swing trade it, I'll show you. I'm telling you, I have an options alert newsletter. We have almost 100 closed out options. Now today was a terrible day for options. We had a bad day, and I'm not going to hide that. We had a spread. We have a spread on Electronic Arts, which today dropped its earnings forecast and has a delay in its major new video game, and it dropped a lot. But we have just killed it with the options, and I take all these signals off of stocks on a depending on the instrument, on a 6 to 8 to 10 Unirenko chart, and they will keep you in a trade for days and days. All depends, your time frame. No, Jonathan, I never take a mid move. I have to get the alignment on entry, or almost immediately after. And I was trying to look for that immediately after. That's the entry I wanted to show you, where you could wait one candle, and I can't find one of them. And they come up all the time. And I look through here and I'm scratching my head and I can't find one. I mean, every entry, here's one. Let me show you right here. This is called a dual bull failure. Now forget the quants and background bias. Just look at the formation. Let's say you're a little bit unsure about entering here. You don't have background bias. You don't have the quants. You stand aside on the entry. So what happens? It forms a second wick. And the bulls fail a second time. Now you have background bias. Now you have the quant. And there's your perfect entry. And I will wait sometimes for this dual bull failure to occur. And if it doesn't, I'm going to lose the trade. But that's a great opportunity to get in on the next candle. And this candle actually is safer than the original. Even though it costs you 2 ticks, it's a better entry. This is all stuff you're going to see in the room. Right now, Wayne, it's only on NT, NinjaTrader. But if you want to use NT on a demo and take your entries on your platform, you can do that. We have traders who do that. Now, NinjaTrader can be powered by anyone, Thinkorswim, Interactive Brokers, E-Trade, all of them. But the only one that I see that works really well is Interactive Brokers. And I don't want to sit here and represent anything to you that's not true. We have a little problem with historical tick data from the other data feeds. So your best bet is to get a free demo, a free data feed, and just take the entries and trade your platform. Yes. Yes, there are, Rick. And they are available through Kinetic. I'm not going to go through it just because of the time, but there's an up tick, down tick and an up volume, down volume for the Dow, the NASDAQ, the Russell, and the E-mini. So you get an individual line for each of those 4 markets, each looking at its respective cash market. And it really, really gives you a heads up on the E-mini. And if you want to trade a longer time frame, I'll tell you I just talked to a trader yesterday. He's located, I think he was in Bangladesh. He day trades options and holds them looking for 2 or 3 points. And he's just a brilliant options trader. He makes a lot of money. He takes the entries along with the cash metrics, tries to hold for 2 or 3 points on an in the money spread, and he makes a lot of money. So I can't do that. I don't know how to do it. I'm not that good of an options trader. But that cash metric line is really is good, and you get one for each of those markets. Yes, Tim. If you bought the 3-line system, you get full credit for it, Tom. So it's just the difference between what you paid and the $13.99. You get 100% credit for it. Absolutely, Michael. You can put in an auto trailing stop. Of course, you can. NinjaTrader gives you the ability to use a trailing stop like that. That's really independent of us. It's really the NinjaTrader program. We use it. We use a trailing stop like that. It follows the trade all the way down. And we'll help you configure it. Sergio's a master of automatic trade management strategies, and as part of the configuration, we'll set up your targets and stops. We'll give you our recommendations. You tell us how many contracts you want to trade, and we'll configure for you. Like I said, on the DAX, we look for a 6-tick first target and a 20-tick second. On the NASDAQ, we look for a 20-tick first and a 30-tick second. On crude, we look for a 5-tick first and a 15-tick second. So, you can do it differently. We base it on the average true range of the instrument or its volatility. Everything we do is based on math. I hear people say all the time, I want a 2-to-1 risk. I want a 3-to-1 risk. You can't want. You can only get what the market will give you based on its volatility. It's all got to be based on math. I could set a 400-tick second target. It doesn't mean I'm ever going to get it, but I could tell everyone, yeah, our risk to reward is 17-to-1, but it's irrational and it won't happen. Again, Steve, in the trading room hours, I'm usually in the room like 9:25. And then we trade till we hit our profit target, which is $400 to $500, or we hit it early, or we get to 12:30, 1 o'clock and volume dives, or this morning we traded for 17 minutes and we hit our profit target on 2 trades. So we start at 9:25 Eastern, and hopefully we'll be done in 20 minutes. That's my wish every morning. Everybody's out with whatever amount of money they made, depending upon the number of contracts they trade. Yes, again, Gene, we install the entire program for you, everything. I mean, if you didn't have help, you couldn't do it. I think I got that, Ian. Like I said, we're looking at between 75 and 80%. George, it can't be automated with Ninja yet. Now we're looking in the future to make it Bloodhound compatible so that you can automate it yourself. If you own the program, you'll get the Bloodhound upgrade. We've had so many people ask us to make it Bloodhound compatible. I'm getting tired of hearing it. It's on Sergio's to-do list, and it's not that far away. And when it becomes Bloodhound compatible, then I think you can automate it on Ninja, and then you can do it. And I'm telling you, it's something that we're committed to doing. And again, I answered that question already. Sure, Jonathan. The 2-10-20 is simply going to create a new bar every time it goes 2 ticks. Now you said the 2-10-20 in the actually it's a 4. It's a 4. These are the 2 settings. There's others, but these are our 2 main settings. A 5-2-10 or a 10-4-20. The tick trend, every time you get two ticks, you get a new candle. The tick reversal is 10 plus 2. So you need a 12 tick, you need a 13 tick stop, because that's where you get your reversal candle. That's really the metrics. The tick offset means that on a reversal candle, you're going to have a 5-tick candle body right here. This is always going to be 5 ticks. Now everything is double on the 4 Unirenko. You're going to have 4 ticks per candle. You're going to have 25 tick stop. So the bigger the Unirenko, the bigger the reward, but the bigger the risk. Based on the way the DAX and crude move, we traded 2 Unirenko. Based upon the way the NASDAQ moves, you got to trade a 4. The NASDAQ can spit out 13 ticks in a heartbeat and take you out of the trade. You need a big stop. And remember, it's only $5 a tick on 2 contracts. It's not a lot of money if you take a loser. We don't take many. And this can go 20 or 30 ticks with no trouble. Yes, Stephen, I am trading the DAX at the NYSE Open. The best trade we had this morning was off the DAX. We start trading the DAX at 9:30 a.m. as soon as the NYSE opens. Thank you, Jay. Thank you, Ricardo. This AM there was. I had 1 NQ trade. I have to move this back to the again. I'll show it to you really quickly. I had an NQ winner. I had 1 DAX winner and 1 NQ winner. And actually, I closed the NQ trade early, and I'll show you why I did it. These are all live trades I took. I mean, these aren't after the fact or hypothetical. Everybody in the room got them. At least everyone that was awake. Now and I'll show you the trade. It was early in the morning. It was right here. I took this trade. You see how we had the multi-time frame alignment to the downside. The wick pushed right into the market open, which is resistance. I took the trade short right here. Now the trade went 16 ticks. Now our first target was 20, but my perception on the trade was that we had a pivot low. So I took the first target out at about 12, and then I closed the trade really quickly. So we made about $185 on that trade. And that was the only trade I took on the NASDAQ. Now, if this trade would have been up here, right off the 50, and started here, I never would have closed it. And that's just trade management. I knew this was slightly riskier. I wasn't necessarily going to go for the full 20 and then the 30. I knew it when I started the trade, and I managed it appropriately. Everybody saw the management, was able to adjust, and there was no problem. So that was the trade. While you don't need a powerful computer, this doesn't use a lot of system resources because it doesn't store data. I have just a regular Hewlett Packard, and I swear I have like 25 charts up. System resources is never going to be a problem you'll have a problem with. This will power your software fine. Really, you don't need a great video card. You don't need a lot of RAM. Standard computer will run it fine. Again, Gene, 9:25 Eastern until we hit our profit target. Nice, Michael. A 20 tick NQ. Now, I think 20 is a little bit much for the ES, but essentially we're trading the same kind of NQ chart. Michael, on crude, our stop would be 13 ticks right here. If you look at the settings, you're going to get a reversal after 10 plus 2 is 13. So a 13 tick is initial stop. But remember, we're trailing the trade. If it goes 5 in our direction, hits our first target, I take 2 contracts out. Then we're only down on the trade. We went from 13, now we're down 7 on 1 contract. And I'm Mr. Chicken. I usually bring the trailing stop to break even. And I squeeze a lot of trades that way is they go back 5 or 6 and then they drop 27 ticks. But that's how our trade is configured. On 2 contracts, you're going to have to take $260 worth of risk. But the upside of that is also 260. So you have a 1-to-1 risk to reward, and we get a lot more winners than we get losers. Significantly more. Correct, Larry. The dark pink is the primo time short, and the dark green is the best time to go long. That's when your 2 NQ higher time frames are aligned in a way. I'll show you in the trading room. It would take me too much time here, but it's a complex calculation using a 15. We don't even show here. But this is a strong uptrend when you have this. And this is your best long entry. And this is the time when you get your best short entry. And you see here, now this is too early in the morning for us to trade the DAX. It's 8:01 in the morning. We don't open till, but this is a stellar short trade. And look how far it goes. Way further than we need it for a full winner. Now, this is a $275 trade on 2 contracts, and it's a 350 euro trade on 3 contracts. And you're trading it with the appropriate background, oscillator entry, dual dots, 50 down, 3 line heading your way, 2 of the 3 quant lines are red, and you're set to motor. Very, very low risk, high reward short trade. Michael, if you want an audible alert, we'll program it for you. We don't have, the reason I don't have audible alerts is because the audible alerts used to drive me nuts. If they would beep, because I have so many charts set up, I would get audible alerts on multiple charts. I mean, if you want the oscillator to be audible, we can make it audible. It takes Sergio 15 minutes. The audio file is in there, we just disabled it. It depends on what signal you want. Remember, the one that we're gonna eventually have and we're gonna upgrade is this revolutions indicator. There we're gonna have the audible, because that's gonna be your perfect entry. Everything else you have to verify. This is gonna be not only a trading room premier entry, but an automated entry. We just don't have it perfect yet. But you really have to perk up when you see this signal. A lot of these work. I'd say 8 out of 10 of these are successful. So if you tell me what you want to alert audibly, we'll do it for you. Thank you so much, Phil. Thank you, guys. We made about $450 today in the trading room, Martin. Okay. Yes, we changed the DAX. We made it faster, Frank. You are correct. Okay, Michael. Listen, you can back test it, Michael. You can just go backwards. I understand what you're doing. But I'm telling you, if you take any one of these markets and you take an entry that is all the parameters I told you, you're going to be hard pressed to find a loser. It's very, very, very rare. In fact, what you're going to see, unfortunately, are winners we let sit to wait for a trade like that, which is perfect. A trade like that, which is a little too oversold, but here is your trade. Now, if you can find a trade like that that loses, I give you a nickel, because they just don't. I'm telling you, this is where you back the truck up, and it's just a question of how many contracts you can trade and how much money you want to bank. This is a perfect trade. So I can tell you that, okay? Okay, Michael, we're here. So let me just go back really quickly to the offer. And remember, we configure, we do everything. And don't worry about that. And it's right here. It's $13.99 lifetime. You get everything, all upgrades, all add-ons. And if you're one of the first 5, you're in the room for 2 months and you get a ton of training material. And listen, whatever you do, we're the little guy. We have to trade with the big institutional people. Let's get in with them at the start of their move. That's how we make money. We don't counter trend trade their money. We go with their money. We roll in their direction. So everyone have a great, great afternoon. And I wish really everybody the best of luck, because we're all the small guys here and we're fighting off the other small guys. We should take the money home every day. But take care again and have a wonderful, wonderful evening. Bye-bye, everyone. And we will record this. Bye-bye.